Hey there guys, Shingirai here again with another update on portfolio performance over the past week. We saw a relatively risk-off week with only 4 positions in total out of our 36 holdings returning positive returns, and that would see our most risk-on portfolio, CBAM 5, returning minus 2.21%, up to our more defensive portfolio 1v2 returning minus 1.31%, as there were very few places to hide across both the fixed income and equity markets. In terms of positive returners on the week, we did see that return from Japanese government bonds up 0.45% on a 1-week basis, alongside those shorter duration MAN GLG high yield position up 39 basis points, alongside US high yield bonds as well, up 21 basis points, just showing that safety on the shorter end of duration in an environment where investors have been really worried about inflation reading coming in persistently hotter, and that perhaps leading to central bank reaction, continuing to tighten monetary positions further going into the future through interest rate hikes and some quantitative tightening. In terms of detractors from performance, we continue to see that narrative playing out for geopolitical tensions from China and a bit of that reopening trade beginning to go away. We also would see that all 3 of our China positions down about 5%. But coming into this week, again, we saw some very encouraging data with the Chinese PMI and factory activity being the highest that it's been in the past decade, really causing a rally in our Chinese equity positions, up about 5% on Wednesday. And then looking forward onto a quarter-to-date basis, 1 out of 10 of the CBAM portfolios outperform their respective benchmarks, while with the narrative here shifting somewhat to a decidedly risk-on quarter-to-date view, with CBAM 5v2 returning 3.48%, down to CBAM 1, which is more defensive, returning about 1.32% on the quarter and year-to-date basis. In terms of top contributors to performance, we did see some rebound there, especially for our European equity positions, where the Pictet Clean Energy Fund also holds quite a couple of European equity companies as well, through that clean energy philosophy as well, looking for companies that are within the supply chain of power generation and power distribution in the clean energy space, up about 12.2%, alongside Bailey, Guilford and Allianz up more than 9%. Then here I'll also highlight our thematic positions, European smaller companies and also large cap European companies, alongside UK mid, small and large cap, also up more than 5% on a quarter-to-date basis, again emphasizing that really risk-on sentiment coming into the quarter. In terms of detractors from performance, we continue to see that downside capture for our equity Indian subcontinent position, with inflation readings coming in higher than expected and growth forecasts being missed, and that would bear as headwinds for the Indian sort of investment case. But then again, we also see continued space in the political sense, in that political stability seems to exist in India. There is a growing middle class generation, and also you've seen that demonetization beginning to seep through the Indian economy, which have been positive tailwinds in the long run. We also saw some detraction in performance in iShares Global Clean Energy, a bit more interest rate sensitive than our Pictet Global Clean Energy, as holding more less of the utilities that you'd find in the Pictet Clean Energy Fund, and therefore being more interest rate sensitive. And then finally, our diversified return fund also down 1.83% due to exposure to the longer end of duration through inflation-linked gilts and also just global treasuries. Just like to note that we'll be seeing quite a bit of activity coming into the month of March, with most importantly probably central banks' interest rate decisions towards the tail end of March, and we'll be monitoring that closely going forward.